A very good day to all the students. You're welcome to the next lecture in the series. This lecture is dedicated to a very important topic, that is the comparison of financial accounting, cost accounting, and management accounting. We have studied in the previous lectures that there is a close relationship between these three branches of accounting. Let me sum up what we studied in the previous lectures about the topic, and then we will see the comparison of management accounting with financial accounting and cost accounting separately. Okay. If you remember, we studied that whatever data is generated using the past records in financial accounting are used in cost accounting for further analysis to obtain the costs of the individual products, processes, departments, and it is further used by the management accounting means that management accounting makes use of the information obtained from the financial accounting as well as the cost accounting. Okay, so let us see the comparison one by one. I have marked the point of distinction. This question has been many a times asked in the exam, so you need to be vigilant about it. You need to be aware about the concept. It's not at all difficult. We just need to sum up the information, whatever we know about the three concepts. Financial accounting, you know very well. Cost accounting also you know very well. Management accounting, I'll revise once again. It is a process, it is a method of accounting which helps the managers to perform three basic functions: planning, controlling, and decision making. Management accountants basically use these perform these three tasks by making use of the information obtained from financial and cost accounting, and helps the top management in making the further decisions about the expansion of the organization, by for taking various decisions whether we need to buy the product or we need to produce it on our own, and many such decisions time to time. It may be even related to the expansion of the business. If you are suppose working in the geographical boundaries of the country, whether you would like to go beyond that, whether you would like to get involved in exports or not. If you are restricted to a particular area, state or district, whether you would like to go beyond that or not. You would be having profits, or you would be having the capacity to generate and meet the demands in that situation or not. So these are the basic things that management accounting does. So I hope till now, using the previous lectures, you are totally aware with the concept of management accounting before doing this difference. Because at this point, the concept of financial accounting, cost accounting, and management accounting, at least the meaning should be clear to you all before studying the difference. Because we will be comparing the basic features of the different methods of different branches of accounting. Okay, let us see. The first point of distinction that I have marked between the financial accounting and cost accounting, this FA and MA have written in short just to save the space. First difference I have marked as primary users. We know very well that in financial accounting, internal users are also interested, but basically external users are interested, and it is being even published at various mass sources. Because the investors, government authorities, creditors, bankers, and many users, they are interested in the reports generated by the financial accounting, because it tells us about the financial status of your organization. For the management accounting, we have already studied this, that it is basically meant for the internal use of the organization, and it is not being, the results of this particular accounting are not being disclosed to the outsiders. It is basically for the use of the managers of the business, employees, the owner, etc. Now, the next point of distinction I have taken as purpose of information. It is quite simple. Purpose is like financial accounting helps investors, creditors, and others to make investment, credit, and other decisions. That they are, it helps them to get to know whether they would like to invest more or would like to continue their investment in that particular company or not. Whereas management accounting helps managers to plan and control the business operations. They decide there how to follow up their business operations. Further, next point of distinction is timelines. If you see, financial accounting is basically it's based on the past records. It's delayed or it's historical in nature. Whereas management accounting is either current or futuristic. Either we take decisions for the current situation or for the future expansion and other strategies. Now let us study the restrictions between the two. We know that financial accounting is governed by the various governing authorities. We do have GAAP, that is generally accepted accounting principles, and we do have the regulations and the accounting principles stated by the ICAI, Institute of Chartered Accountants of India. But in management accounting, this gap does not apply, but the information should be restricted to strategic and operational needs. Means it depends on the organization whether they would like to perform it or not. Nature of information. In financial accounting, it is objective, auditable, reliable, consistent, and precise. Whereas in management accounting, it is more subjective, judgmental, valid, relevant, and accurate, because it is based on the various statistical tools used to perform the particular task. If we see the scope of the two forms of accounting, financial accounting is highly aggregated information about just the overall organization, whereas management accounting is disaggregated information to support the local decisions of the managers. Behavioral implications. In financial accounting, concern about adequacy of disclosure is there, whereas in management accounting, concern about how reports will affect the employee's behavior is also a part to study. Features. If we talk about the main feature, financial accounting needs to be accurate and timely. Timely means by the end of the year you need to prepare your books of accounts, and it's compulsory under the law and is an end in itself. It ends thereby. Means you do not put any more an analysis after preparing the final accounts. Once by the end of the financial year, by 31st March or so, when you prepare your P&L account, trading account, or your balance sheet, once they are prepared, you do not perform any further analysis on that in financial accounting. It is closed thereby. Whereas in management accounting, we perform the tasks beyond that as well, usually approximate but relevant and flexible. Except for few companies, it is not mandatory because we were studying the features, and we do perform the analysis on the records obtained from financial and cost accounting to further analyze the situation and take the results. Let us see the segments of organization. It is in management financial accounting, it is primarily concerned with the reporting for the company or as a whole basically, whereas in management accounting, segment reporting is the primary emphasis. Why have I used the word segment emphasis? Because it is like it does not treat the organization as a whole. It takes each and every department, every product, process individually and take the decision accordingly for each of those. I have marked few more differences. I have given an exhaustive list of differences. You may pick 8 to 10 from it for your examination purpose. Because if we have more points, you have more options to remember and manage the things. And up to me, you just need to remember the points of distinction and you will be able to do it. It's not at all difficult, but important from examination viewpoint. I must tell you here at this point that from unit 1, you can expect a basic question from this part, like what is the meaning of management accounting, its nature, scope, and the difference between the financial accounting, cost accounting, management accounting. Accordingly, they may ask the difference between all three or between two of them. Accounting methods that we use in financial accounting, it is based on double entry system for recording business transactions. You know very well, for every debit there is a credit. We use the double entry system, but in management accounting it's not like that. We use various techniques further we will be studying in the next upcoming units. Let us see the statutory requirements. Under company law and taxation law, financial accounting is obligatory to satisfy the various statutory provisions. Means it is mandatory as per the law to perform financial accounting. Means it is like not an option for the organization that if they wish they cannot make the financial accounts. It is not like that. It is whereas it is optional, purely optional in management accounting, and it totally depends on the utility. Its usage, its importance actually makes it highly desirable to adopt. So the organizations which are large and which need to take managerial decisions, they all opt management accounting. Whereas a small firm, a small grocery shop even may maintain its final accounts and may not need management accounting at that point of time. Second last difference, analysis of cost and profit. It shows the profit or loss of the business as a whole. We know that we can obtain the net profit or net loss from the P&L account. It does not show the cost and profit for individual products, processes and departments. I discussed this before as well. It treats the organization as a whole, whereas in management accounting you treat each and every product, process, plant, department as individual center. If you remember, in cost accounting we studied the responsibility centers, cost centers. So each and every responsibility center or cost center is having its own calculations where out you perform and take each and every individual part as an unit, as a unit, and perform calculations for that individually to see that that particular department or that particular unit is giving us profit or not. Periodic and continuous reporting. In financial accounting, financial reports like P&L account and balance sheet are prepared usually on year-to-year basis. This we have discussed, whereas this we can prepare as and when required, monthly, weekly, daily, depending on the managerial requirements. Hereby, I am ending the difference between the financial and management accounting. The next part comes the difference between the cost accounting and management accounting. Here out you would see that certain points of distinction are same. Only the difference of cost accounting is being put in that. So it's quite easy. If you are able to learn one of the differences, the other would become very easy for you. I have quoted few points in this because we have covered a lot of points of distinction in the previous part. So at first instance, I'm taking the scope of cost accounting. The scope of cost accounting is limited to providing cost information for the managerial uses. Means that it's like it's limited to the analysis of cost. They may not take the decisions for the future costs. They are taken under management accounting. So when we compare both the forms of accounting, scope of management accounting is broader as compared to the cost accounting, as it provides all types of information, cost accounting as well as financial accounting information for managerial uses. Basically, if I conclude this point of scope, cost accounting is basically related to the calculation of cost of that particular unit and minimizing the cost. It ends up there out. It does not take any actions for your future costs. They are taken up in the management accounting. Now let us see the second point of difference that I have kept as emphasis, that on what particular area the particular branch emphasizes. If I talk about cost accounting, the main emphasis is on cost ascertainment and control to ensure the maximization of profit. I was just telling the same thing. Whereas in management accounting, we do have the three main functions you would see everywhere. You must learn that by heart: planning, controlling, and decision making. This is again also done to maximize the profit. You would see certain similarities, but there are differences as well. Maximization of profit is the aim of all the three forms of accounting. We are performing any form of accounting, we are performing recording any financial transaction just to know that whether we are earning profit or loss. And on the second part, if we are having profit, we need to maximize it, and if we are in case if we are in a loss, then we need to take measures to come up in profits. So that basic funda is same, but we utilize this accordingly in different forms of accounting. Next, we have techniques employed. This is quite easy. If you remember, the cost accountants perform various techniques to calculate costs and to see the various differences and all that. Let's name some of the techniques that we studied in the previous semester. Like we studied standard costing, variance analysis, marginal costing, cost volume profit ratio, that is CVP analysis, basically uniform costing, interfirm comparisons, etc. These are the basically techniques which are employed by the cost accounting to perform that particular branch. Whereas in management accounting, it uses all these techniques. In the cost accounting that we use, it uses all those, but in addition to the techniques that we use in cost accounting, it has more techniques. Like we have ratio analysis. if I go into the depth of that ratio analysis, like if you remember in class 11 or 12, you studied the ratio analysis, where you studied the profitability ratios, where you studied the turnover ratios, which tells you more about the in-depth activities going on in the organization. Funds flow statement, if you remember funds flow statement, though it is not a part of your syllabus now, it was the part of the syllabus till 2017, funds flow statement, but now it has been removed. So at the moment you won't be studying funds flow statement, but you should know that what is funds flow statement. It is taught in CBSE 11th and class 12. If you remember, funds flow statement is basically the statement of changes in the working capital. It tells you, it shows the points where and how funds are being allocated. Okay, then we do have further statistical techniques, operations research, and certain techniques from various branches, maybe mathematics, economics, break-even point, etc., whichsoever can help the management in doing their tasks, in completing in taking the measures for the future are considered. If I talk about evolution of cost accounting is basically dependent on the limitations of financial accounting. What is the basic limitation which evolved cost accounting? The basic limitation of financial accounting, that it does not work out for the minimization of costs and maximization of profits. It can just calculate the level of profit for you. What is the usage of P&L account and balance sheet? P&L account gives you the status of profit earned or loss suffered in a particular period of time, but it does not tell that how to reduce the losses, or how to reduce the costs, or how to enhance the profits. In turn, it gives the cost accounting gives you the analysis of all these things. So this limitation of financial accounting has actually evolved cost accounting. Now let us see for management accounting. If we see, management accounting is also evolved due to the limitation, but it has evolved due to the limitation of cost accounting. What kind of limitation of cost accounting? That cost accounting does not take the decisions for the future. It does not plan for the future, that how to expand the business. Basically, we can say it is an extension of the managerial aspects of the cost accounting. Just the last slide to cover up the few more differences. Okay, first here we have statutory requirement. If you know do you know the meaning of this term statutory? Anything that is legal. Okay, so what are the legal requirements? In cost accounting, records has been made compulsory just only in selected industries, whereas if you just remember, we have seen in financial accounting it is mandatory to have the records, but in cost accounting only very few industries which are notified under the government notifications and all that from time to time are only supposed to produce the cost accounts, whereas management accounting is purely optional, it's purely voluntary, but its utility somewhere or other forces, or you can say emphasizes, or you can say persuades the organizations to perform management accounting and maintain the records. If we see the database like from where the data is being derived, for financial accounting, for cost accounting, sorry, data is obtained from financial accounting. Till now, I hope you got to know that very well. Whereas in management accounting, we use the data derived from financial accounting as well as cost accounting both. Status in organization. In the organizational setup, cost accountants are placed at a lower level in hierarchy. If we see from top to bottom in the hierarchy, cost accountants are placed at a lower level as compared to the management, and vice versa. Management accountants are generally placed at a higher level in hierarchy than the cost accountants. This is the last point which I have kept as installation. Installation basically talks about the cost accounting, basically the accounting system. The cost accounting system can be installed without any other support. You just need the data from the financial accounting, which is mandatory, which each and every organization, may it be small or big, would have that. Even I just told you, a big organization like Tata Industries, Reliance, or a small grocery store, everybody would have their books of accounts. They would have the final accounts. One would be publishing because they are a big organization, one may not be publishing, but they are filing their return, they are maintaining their books of accounts for their own records. Okay, so but thereout it is mandatory, but cost accounting system, it cannot be installed without the other forms of accounting. Means we need the information from the other forms of accounting, from financial accounting as well as management accounting. For that purpose, I have mentioned that in the point installation, that cost accounting system can be installed without management accounting, but it needs financial accounting, whereas management accounting can't be installed without a proper system of cost accounting. Actually, if you see the point of cost accounting here, it is like not moving backward. Means that management accounting is not needed for cost accounting, whereas cost accounting is needed for management accounting, and on the contrary, financial accounting is mandatory for both of them. And financial accounting does not need cost and management accounting for its maintenance. Okay. So this was all about the differences between the three branches of accounting, and I would suggest to you people that now we are almost at the end of your unit 1. One more upcoming lecture will end this unit, and I would like to suggest that each and every unit is having equal weightage. So this unit is having less number of topics and all theoretical in nature. I know it becomes sometimes difficult for those students who are more interested in numericals, but still theoretical topics are not very difficult. So we are having very less number of topics in this particular unit. So in that situation, I would suggest you to prepare this unit using the given lectures. Thank you so much. And before ending, I would like to say that if you have any doubt related to the topics that we have covered till now, you may write a mail to me at rashigupta.gn@jagannath.org. Thank you. Stay safe. Stay home. Bye.